Now, a barrel of oil touching $70 today before sliding back. Now, you just listened to Ray Carbone saying that he sees $70 a barrel as a resistance level. Let's continue our conversation. This is Taking Stock on Bloomberg. I'm Pim Fox. My guest is Frank Holmes. He is the CEO and Chief Investment Officer at U.S. Global Investors. He helps manage more than $2 billion. Frank Holmes, turn your attention now to the energy market, specifically oil. What's driving the price of oil right now? Is it real demand?
I think a big part of it is currency. The dollar coming off has been a factor probably for the last $10 move in the price of oil. The dollar reversal today of coming off a support area, it appears, for those who are technically oriented traders, we look at a different way that the dollar is extremely oversold. Oil is extremely overbought over the past 3 months of trading, along with the price of gold. And we're just due for the next 60 trading days to have a correction. When it comes to gold, what is most interesting is that June is usually a correction month for gold because you have the rainy season in India, which is the largest consumer of gold, before we start getting a rally into the fall. But oil is also uniquely different in that oil has a modest correction on looking at seasonal patterns in June, but usually then charges up to September. There's
Frank,
a real, Pim,
sorry, go ahead. I beg your pardon. Go ahead.
Pattern.
A real seasonal pattern to the operation of the price of gold as well as oil.
Right, and then you overlay that with the currency and supply-demand factors. Now you've got three factors pulling these commodities.
When you talk about the U.S. dollar as a currency, almost like a commodity, if the value of the dollar falls, wouldn't that be good for U.S. exports, thereby negating the whole idea of protectionism?
It would. It would be spectacular. One of the big factors of the strong dollar took place in the last 6 months was short covering of these hedge funds that were borrowing in U.S. dollar and yen terms. If you looked at last year, as that these were the two strongest currencies as people dumped commodities and every other type of stock or asset class and had to pay back their loans to the banks, we had a spike in the dollar, which it really impacted exports. So I think a declining dollar, no doubt, will help exports.
And what about investing in emerging economies? You said that you're just back from Asia. Do you think that that is a place to put new money right now?
Well, I think it's due for a correction because everyone's so focused on it, and the dollar is due for a rally. And the dollar rallying does impact emerging market asset classes. But I think it sets it up for a great buying opportunity on any form of a 5% to 10% correction would just be excellent for investors to consider. And the reason for that is the policies there are very focused on job creation. There's not a big social net like you have in Europe or in America is pushing for that direction. So there's a much higher savings rate and independence about creating jobs. And I think that that's what's important to recognize, the policies that are there.
Frank Holmes, talk a little bit about how important the politics of the United States, how important that is for investors overseas. What is the reaction? What is the feeling of overseas investors?
Well, it's simple. You look at monetary policies and fiscal policies, and money supply is rising, and that's creating liquidity. The fiscal policies, how much is being spent on infrastructure spending. And in these parts of the world, they believe that money being directed towards infrastructure spending is more sustainable than job creation, rather than just creating a bigger social net for free education and free health care. Over there, you have to pay for these too, and it's a privilege to have them. So I think that that's where there's a bit of a concern is what the policies are for all this debting, this raising of the debt. What will that money go towards?
And do you think that investors ought to be putting their money then in U.S. stocks? I mean, for example, should they be betting on healthcare stocks? Have they already taken into account all the potential for reform?
No, I don't think the healthcare really now is really taken into form. But I do think that the stocks like the Caterpillars of the world, these capital goods that have been acting very well, I think that there's more leg room in those asset classes.
What about if interest rates do increase? We've been listening all day to some bets by interest rate traders saying that we could see an increase in the cost of financing U.S. debt. What happens if it rises?
Well, that would definitely hurt the price of gold. That would strengthen the dollar, and all commodities would decline on a relative basis. But what I do think is that that's remote. because I do think the winds of deflation are still weighing on us. And that's one reason why there's so much printing of money, is to stop what took place in Japan and to deal with it. Hopefully, the government wakes up to all these tax raising, that they really assess that, and so that they do not fall into the Japanese 20-year trend of deflation.
Having said that, Frank, would you be investing in any energy stocks right now? For example, natural gas as well as oil?
Well, you know, it's a great question, because gas is really taking it on the chin, and gas is a great source of energy. It doesn't pollute the air, and it's inexpensive relative to the price of oil. So my favorite stock there is San Juan Basin, because it's highly correlated to the price of gas. Gas rises, the dividends rise, it pays a monthly dividend. And I think odds favor as the summer heats up. There's a greater conversion from oil to gas for utilities, that we'll see an increase in gas prices.
Frank, I'll give you about 20 seconds. Tell me about the retail investor right now. What's the mood of the retail investor?
Chin is, they're still bruised. People are cautious, but money is coming. Money is coming into our funds. We're seeing that consistent, steady flow, and that's what's positive and constructive. We are seeing better questions when we do our webcasts. We're seeing a bigger response from those, and I think that that's a much more positive, constructive sign. Confidence is starting to pick up.
All right. Always a positive and constructive conversation with you. Thank you very much, Frank Holmes, the head of U.S. Global Investors.